So there will be a lot of disconnect between the definitions and the reality. So the proposal of the institute was that these be kept somewhere in the power of either in the schedules, which can be changed through SROs, or through the power of the commission, so that it can be updated from time to time. But in the second draft also this has not been changed, and still even the threshold is embodied within the main law itself. Then the micro companies which have been introduced, we'll see the threshold also later on, but the financial statements of the micro companies are required to be signed by all the directors instead of the 2, which is the case with rest of the companies. This is an interesting one where the financial statements, consolidated financial statements, are required to disclose any qualifications by the auditor of subsidiary companies on the subsidiary standalone financial statements. So proposal from the institute was that the qualification has got nothing to do with the preparation of the financial statements itself, so it not be there. If something has to be handled by default, it will automatically be handled into the report of the auditor, so it not be made part of the financial statements, consolidated financial statements. So it is still there in the second draft. So the proposal was there, but nothing has changed in this respect, and the consolidated financial statements will be required to disclose these qualifications in the audit report. Another proposal from the institute was that you give at least a choice to the companies that they can choose to apply full IFRS instead of the present status of accounting standards as applicable in Pakistan, which is not a full set of IFRS itself. At least the choice should be given if IFRS are not being made mandatory. With certain disclosure requirements, whatever the regulator wants, they may be added on to that, so that the companies can claim to be preparers under IFRS. Maybe one of choice is given to companies so they cannot turn back, but this matter has not been taken up in the second proposed draft either. Another proposal was to harmonize different definitions, like the definitions of associate, subsidiary and holding company in accordance with IFRS. So the point of view of the commission was that these definitions we require not only for the financial statement purposes but also for our regulatory purposes. So a counter suggestion was that let's make it that at least for the financial statements, the definitions which are there in the IFRS are going to supersede for the preparation of financial statements, but it has not yet been incorporated into the draft. Now coming to the key changes in the audit and related matters. There has been a debate between institute and the commission that certain matters which are already in the auditor's report be taken out, so that it be in line with the ISA's report, like investments made were in accordance with the object and all those things. The commission has introduced 2 more requirements into the auditor's report. First, that if there are loans and advances by the company on the basis of security, the auditor has to confirm that these are properly secured and the terms were arm's length. So not only the arm's length issue is coming back, the second, the auditor has to report that they are properly secured. Properly, I don't know the definition of that, but it's properly secured, the loan. And second, the auditor is to confirm whether the compliance of the requirements of the Act in relation to acquisition and disposal of assets has been done or not. So these 2 expressive additional statements are proposed to be added into the auditor's report. And interestingly, commission to have a power to keep on changing whatever they want to add. So the commission will have a power by notification to adding to whatever they want in case of certain classes of companies or in cases of all companies. The proposal was that it should be in accordance with ISAs, but as I said, even the second draft also has the same matters for inclusion in the auditor's report. Presently, the audit fee can either be determined in the general meeting, or the manner can be determined or approved by the general meeting, and mostly it is that the directors get the authority for determining the remuneration. The proposal from the ICAP was based on the change which is envisaged, that the determination will have to be done in the general meeting. So that second part, that the mode of determination can be approved in the general meeting, has been taken away from the law. And mostly the fee also depends on to the changes that happened during the year, which is after the last AGM that had happened. But even the second draft, this has not been included again, and still it is the same situation, that the remuneration will have to be approved now by the general meeting. There is another one that the Commission is insisting after, even after the proposals from the Institute, that the report is to be signed by the engagement partner in his own name for and on behalf of the firm. Already the name of engagement leader is being disclosed in the reports, but the new requirement is that it has to be now signed in the person's name, not in the firm's name. The proposal was that it be the same which it is now, because already the identification is there, but even the second draft has the same amendment, that the report will have to be signed in the individual's name for and on behalf, and not the firm's name. In the first draft, there was a requirement that came up that partner of a listed auditee client has to attend the annual general meeting. Presently, it is that he himself or any other authorized person can do that, as far as the law is concerned. And as far as the code is concerned, the code requires that another partner has to go there, which is authorized. So the proposal was that it be in line at least with the code, and the presence of the audit engagement partner should not be made mandatory into the AGM. So in the second draft, this has been reverted back to the same provision that was before, and the SCCP has agreed to these comments. As to qualification of auditors, even presently for the companies which have a paid up capital of less than 3 million, the chartered accountants and cost and management accountants can be the auditors. But now the Commission is being empowered that they can keep on adding who else can be the auditor of the companies who fall in these categories, which are the paid up capital of less than 3 million. Certain specific statutory rights have been added for the auditors, which is one, auditors can now also require information from the employees of the company, and the employee is required to provide all the information effectively on oath to whatever he has. And second, this power is now being extended to the accounts of the subsidiary and to the employees of the subsidiary. It does not say that only in case of consolidated financial statements it is to be there, but in all cases, even in case otherwise, the power to have access to the accounts of the subsidiary and to the employees has also been added into the law. The micro companies classification that we had seen, so the definition for that is the companies which have paid up capital of less than $1 million and whose revenue does not exceed 25 million. And these companies will not be required to have their audit done. So the micro companies will only have their financial statements prepared. It will be their choice whether they want to be audited or not, but the financial statements will have to be signed by all the directors and not just the two authorized directors in this behalf. There is a new requirement that the consent to act as auditor has to be submitted by the auditor to the registrar also now. So within 14 days of the appointment, the auditor will also have to submit the consent to act as auditor to the registrar directly. It already goes to the registrar through the company, but now this requirement has also been added to the auditor. A couple of other proposals were made by ICAP which are not yet incorporated into the body of law. First, the proposal was that instead of a firm being appointed as auditor, where present requirement is that only that firm can be appointed where all the partners are chartered accountants, that it be changed to a firm where the majority of the partners are chartered accountants, so that non-chartered accountants can also be part of, can be partners into the firm, but not the majority. And maybe enabling provisions can be added in situations that the non-chartered accountant partners cannot have access to the information, they cannot sign or enabling information there, but this has not been added into the body of the law, and still it is only the firm where all the partners are chartered accountants can be appointed by name, the position which is there now. Another one was that the audit oversight board and the creation of that was included in the first draft, and post the settlement of the agreement and the agreement between the two parties, when the institute had a task force which met with them. So in the second draft, all the oversight board related matters have been taken out from the company's law. Shah Sahab will be able to explain that more because he was part of that task force, that committee also. जी बिल्कुल अभी हाँ जी. So it's not yet enacted, but एक house से जो है it has been passed. So Shah Sahab will further explain that, but the provisions have been taken out at least from the company's law. There was another proposal which has not yet gone to them. Shah Sahab and me, we were just discussing that the penalties onto the auditors, which directly provisions are there into the corporate law now, when this oversight board law gets approved there, so these penalties should also be taken out from the corporate law, and the mandate for that should also be given, it should only be given into the audit oversight board and not should remain into the company's law. So these were the changes, the corporate changes, the financial preparation of financial statements and the audit, the key changes that we have discussed. There of course are other also minute changes or other changes which are not very relevant at this stage. Coming to the way forward, when this all started, when the first draft of this came, this act came for the public comments, before that it was not sent to the ICAP. So the ICAP was not really aware before that, it was not a participative body at that time. But after the first one, the ICAP actively started playing a role into that, and from that point onwards ICAP has been a major part of this consultative process. The first presentation by the commission was made to the ICAP in January. Then there was another one in a CPD in February. A seminar was held in Islamabad which was chaired by the FN, but the representation of the ICAP was specifically required there, and the ICAP also presented its proposals there. In April there was a meeting of the ICAP team specifically onto the proposals that ICAP had given, and the second draft had come only after that meeting, this April meeting. In the end April the second draft had come. Then there was a seminar by the NRC onto this one where SCCP had also participated, and then this seminar to exposing the members. So there has been quite a lot of interaction between the SCCP and the institute onto this one. It is expected that the changes which have been brought into the second one, the second draft, the formal comments will again go by the institute and the formal interaction will be there. So the comments that we have discussed and probably the further that we will share in the question answer sessions which will come up, we'll share that with the commission also. And it is expected that a third draft will be coming, and the date is expected to be 25th May, or by the end of the May it is expected that the third draft will also come here. In all such jurisdictions where new laws have come, generally even after the laws come into force, a year or a couple of years later on, task force are again created to see how the laws have performed, what have been the issues, so that again a second amendment can come in. In India also, 2013 was when the last act came into, was enacted. But in 2015, a task force was created and gave its report, and a major revamp was done just to handle the same thing. So the proposal from the ICAP will also be to SCCP that a similar task force now be agreed, that after this much period of time there will be another review by a joint task force, or what will be the modus operandi for